Good morning, everyone. I hope you are well today. Thank you for joining me. Thank you for tuning in for this installment of the Business Wealth Show. My name, for those of you that don't know, is Annette Ferguson. I am CEO of Annette & Co, UK-based accounting firm. I am a chartered accountant, certified profit first professional and financial strategist. And we help business owners take home lots more money from their business for them and their families to enjoy. Thank you for tuning in and thank you for joining me this morning, or if you're tuning in on the replay this afternoon, this evening, whenever you happen to be watching, thank you so much for joining me and tuning in. I do, as always, very, very much appreciate it. This session today is Strategic Chats. Strategic Chats is my open Q&A session, my Ask Me Anything session, where you can ask any questions that you may have, either of course, about your business or indeed about mine. I am happy to answer those. So do make sure each Thursday when you come to Strategic Chats, have some questions ready, because that is how this session runs. It answers your questions and I love to answer those. I love to hear about your business and I love to answer your questions on your business. So do make sure that you ask any questions that you may have. I would love to hear from you and I would love to see that. So good morning, Eloisa. Thank you for joining me and tuning in. Good morning, Ronald. And I can see we have somebody else, but it just says Facebook user to me. So I am not sure who else we have commenting there, but good morning nonetheless, whoever it is that you are. Hello, thank you for the waves. Thank you for all this good stuff. So Strategic Chats, my open Q&A session, entirely driven by the questions that you ask. So do make sure that you ask questions in the comments section. That is what this session of the Business Wealth Show, this segment rather, of the Business Wealth Show is all about. It is all about your questions and me helping and supporting you with those. Good morning, Magnolia. Thank you. Thank you for joining as well. I'm going to take a drink of my tea and then we're going to get stuck into some questions, because I know that we already had a question yesterday that was kind of pre-asked as well. So let me pull that up. Here we go. Thank you for putting that up, Magnolia. So Doug Douglas asks, can a business invest in cryptocurrency? And if so, what are the tax implications on earning? Absolutely. A business can invest in crypto. So it is possible for a business to invest in cryptocurrency and hold cryptocurrency. When it is sold, there will be a capital gains tax implication. So if a business invests in crypto, basically it spends money from the bank and purchases cryptocurrency. That means that the cryptocurrency is then going to sit as an asset of the business on the business's balance sheet. When that asset is sold, there would be a capital gains tax implication for that. When a business has a capital gains tax implication, it is done at the corporation tax level. So the corporation tax percentage would be used to calculate the capital gain for the cryptocurrency when it is sold. There is no tax implications on the purchase, only on the sale of the crypto. So I hope that that answers your question, Doug, on that side of things. There is also a HMRC kind of article, I suppose you'd say, for want of a better word, on this as well, which I can easily send you to. But that is what happens when a business invests in crypto. It absolutely can hold it. It acts as any other asset on the balance sheet until sale. And then in the same way that any other asset, when it's sold, you would look at the gain on that, the capital gain. You do exactly the same for cryptocurrency. So that is how that works for that. Thank you for the question. So like I said, this session is entirely driven by the questions that you ask. So please do make sure you ask them. I can see we have a number of people on, but being quiet. So do make sure that you ask any questions that you have. I would love to help and support you with those. That is entirely why I am here. So please make sure that you ask them in the comments. If you don't have any questions, this session doesn't become that exciting for all of us. So please do make sure that you ask those questions and that we can cover off those answers as well. That is why I'm here. Any other questions, please do ask in the comments. I do want to answer your questions, so please do ask in the comments any questions that you may happen to have. I would love to answer those as well, and love to cover those off with you. I also want to, I'm also going to, whilst we wait for those questions to come in, oh, excellent. Okay, lovely. We've got some coming through. Excellent, excellent, excellent. So Justine needs clarification on debt snowball versus debt avalanche. Great question, Justine. So methods of paying off debt. There are two methods basically that you can use to pay down debt, either in your business or in your personal life for that matter. One is the debt snowball and the other is the debt avalanche. They both start with you basically listing out all the debts that exist. So even if that's some money due to your granny, whatever all those debts are, getting them all listed out. Now, what you can do then as well is put the interest rate that you're being charged on those, the APRs, down the side as well. So match those up with the total debt amounts. And what the debt snowball says is rank your debts with the smallest amount that is repayable first, and that is the one you start chipping away at first. Of course, you have to keep up with your minimum payments on all other debts, but you start overpaying above minimums on the smallest debt. You get that one paid off, you move to the next one on the list. You get that one paid off, you move to the next one on the list. This is the snowball effect that is happening with the debt snowball. Now, the debt avalanche says once you've got those debts all listed, you pay off the one, you basically sort them by the highest interest rate, the highest rate. And still with all the others, paying the minimum balances, making sure they are paid off. But with the debt avalanche method, you basically pay off the one with the highest interest rate first, you pay that down, and then you go to the next one with the next highest interest rate, then the next one, then the next one. So those are the two methods of debt repayment. There is no right or wrong in reality, because of course, both methods get debt paid off, and that is what is important. Some people prefer the avalanche and some prefer the snowball method. Personally, I prefer the debt snowball, but that is just a personal preference of mine. I know Dave Ramsey, for example, speaks about the debt avalanche method, and that is his preferred method. Like I said, there is no right or wrong, but those are the two ways that that work nicely to do it and also give you momentum. That is the entire point of doing it this way, is to get momentum, to get that kind of win of having some debts paid off. That is why I like the debt snowball method, because you get those wins earlier. You typically get those wins much quicker, and you get that avalanche effect, that kind of the adrenaline effect almost of getting those debts paid off, which is why I prefer the snowball method. So thank you for asking that question, Justine. Great. Good question. What does a chartered accountant do? Is it different from an accountant? I can't see who's asked this question because it just comes up as Facebook user, so apologies. But the thing to note here is accountant is not a protected word. Anyone can call themselves an accountant. You could go out tomorrow and call yourself an accountant if you wished, not having done any accounting training. You might not have even passed GCSE maths, and you could call yourself an accountant, and people do. We see it all the time. People do call themselves an accountant when they have had zero financial training whatsoever, or they call themselves an accountant when they're actually a bookkeeper. They've had some bookkeeping training, but that's about it. So make sure that your accountant is a qualified accountant. I've also seen accountants, I'm going to put this in inverted commas because they're not qualified. I've also seen, recently I saw somebody who basically had a logo on their website, which implied they were a member of an accounting professional body, but actually it was just a business membership that they were a member of that dealt with accountants and bookkeepers, but it's called like something, it had accountant in the name basically. So it made it look to the outside world like they were actually a qualified accountant, but they weren't. They were a qualified bookkeeper when you looked up their qualifications. So that is something to bear in mind, that the word accountant can be used literally by anyone. Chartered accountants, that is a protected word. That is a word that can only be used by those who have qualified from a handful of institutes, one of which being the Institute of Chartered Accountants of Scotland, ICAS, and the other being the Institute of Chartered Accountants of England and Wales, which is ICAEW, which you may have seen as well. Both those qualifications are held in the same esteem, and a chartered accountant is the highest accounting qualification you can get. It is recognized as being, the most strict, the most stringent, the hardest exams, and the most strict with their members as well in terms of ethics, in terms of insurances, and all those things. So that's kind of what happens with a chartered accountant. As a chartered accountant, we have to also keep up with professional development. We have to submit forms every year to our professional body that states what continuing professional development that we have done, that we are keeping up to date with regulations, and we get audited as well by our professional body to ensure that we are holding the standards that are required in order to maintain the qualification as well. So that is the difference between an accountant and a chartered accountant. Anyone can call themselves, literally anyone can call themselves an accountant, and they do. And that is, that's incredibly concerning for many, many businesses, because there's no comeback. If something goes wrong, if you're given the wrong advice, there's no comeback whatsoever. You are basically left at the mercy because they are not regulated in any way. So I highly recommend that when you are looking for accounting support, that you look for a chartered accountant, so that you have that peace of mind that actually the person you are dealing with is qualified. They have to stand by a code of ethics, they are insured, they have to keep up to date with qualifications, and they are scrutinized by their professional body on a regular basis to ensure all those things are in place and to ensure that they are upholding the standards and the levels of service that are required to maintain membership. So that is the difference there. Let's have a look and see what other questions that we have here. So Steve says, looking at starting a pension, do you have any recommendations? Well, Steve, being an accountant, we can't advise on specific investments. That would be an independent financial advisor that you have to speak to about specific investments in terms of your own personal situation, in terms of your risk appetite, and in terms of, where you sit with all of that, what your previous pension history is, how much you have to invest, when you need it to be paid out by. That is the realm of an independent financial advisor that you'd have to speak to in terms of specific recommendations for pension. General recommendation is, yes, you should look into getting a pension. You need to speak to somebody who's qualified to do that. Going back to my discussion about chartered accountants legally are not allowed to give investment advice because that's not what we've qualified in. We've not qualified in giving investment advice, whereas an independent financial advisor has qualified in giving investment advice. So that is their realm to go in. We can, we can look at the tax implications of a pension. Do you pay it from your company? Do you pay it from your take home? Those sides of things, but we can't look at the specific pension investment advice. Steve is also asking, I use a self-employed worker and would like to employ him. How do I calculate his wage so it works out the same as what I have to pay at the moment? The best way to do that is to use one of those online salary calculators. That's the easiest thing. If you are wanting to calculate it yourself, if you just Google online salary calculators, you'll be able to look and see what the take home is and what the employer's national insurance is. And therefore you'll be able to say, okay, out of my pocket, how do I make this the same as what I pay them now? That's the quickest and easiest way to do it. You'll have to make sure, though, that if the online salary calculator doesn't include pension contributions from the employer, that you also include those as well. Because if you take somebody onto your payroll, you may have to make pension contributions for them, depending on their age, their status of work, all those kinds of things. So that's something to note that pension calculators may not include. So you'll want to have a look at what you might want to be paying them in pension. There are statutory minimums, but some people pay more than that as well. So that's a personal choice. And make sure the calculator also tells you what the employer's national insurance contribution is on that salary. That's by far the quickest and easiest way to do it, Steve. Let's see if we've got any other questions. Oh, that's not a question. That's just a comment. What is the most common problem that entrepreneurs are facing regarding finance, but not everyone notices? Oh, this is a really great question. This is a really great question. I'm going to take a drink of my tea while I think about it. What's the most common problem that entrepreneurs are facing regarding finance, but not everyone notices? I think that in actual fact, you know what the answer is? The answer is cash management. People confuse this for cash flow. Cash flow is timing, is cash timing. So if you have a cash flow problem, you've got a timing issue. You've got an issue in timing between when your money is coming in and when your money goes out. That's a cash flow problem. Many entrepreneurs have a cash management issue where they are basically not managing the cash in an efficient and effective way in their business, which means they run out of it very often. So the cash will come in, it will disappear out. There's nothing left for them. There's not enough profit. There's no money set aside for tax. That's a cash management issue. And that is an issue that many people don't notice from a business owner because it just feels like business as usual. It's also a problem that, you know, if your accountant is just looking at your numbers and producing a P&L, they're not going to see that. They're not going to see that information. So that is probably the big problem that many entrepreneurs face, but they don't have anyone able to point it out to them that actually this can be fixed and this is a cash management issue. So I think that that's probably the big one. There. Thank you for asking that. And if anyone does have a cash management issue, I highly recommend that you read the book Profit First. It basically is a cash management system and it helps transform this situation where the money comes in, it disappears. The money comes in, it disappears. So have a look at that book if you have not already, because that book will, without a doubt, help you with that. I'll put the URL on the screen. It's you can go to annetteandco.co.uk/pfbook to get a PDF of the core chapters for that as well. Let's have a look. Justine is saying, are there any recent Brexit updates? In terms of business and the accounting side of things, not much positive is coming out on the news. Of course, businesses are being impacted now. Trade tariffs in April will start kicking in much more as well. And it's kind of, you know, seeing what happens over the next few weeks and months in terms of business impact. It's being shrouded as well with the whole business impact of COVID and lockdowns, etc. So I think it's still a time will tell on this one, in all honesty, Justine, as to the real true impact that we're going to see. What are the factors that we should focus on and consider when we're planning to invest in something? Great question. If you're planning to invest in something in your business, do not do it without a profit plan in place. That's what you need to consider when you're looking to invest in something. Is first off, does my business cash position mean that we can afford the investment in the first place? Because most investments don't deliver a return on day one, for starters. So can your business cash cope with the investment? And then looking to see, okay, what is the payback period on this investment? How long will it take for this investment to realize itself, for me to start getting a return on this investment? Because that is what an investment is. An investment is something you spend money on that delivers you a return. So understanding what that payback period is going to be for you so that you can ensure that the investment works for the business. If you don't have a profit plan in place, that is step one, full stop, end of story. A profit plan is the foundation to financial stability and financial and profitable success of a business. You need to make sure a profit plan is in place first. And if that is not in place, do that. and then work out whether you can afford the investment. That is how you do any increase in spending in your business, is running it through the profit plan. That is that's kind of an absolute bedrock in terms of that. And what is the smartest way to fund my business operation? The smartest way is through sales. That's the smartest way to fund any business operation. Now, it depends on how much you need and when you need it, and whether you need upfront investment and what that looks like. But fundamentally, the smartest way is through sales, whether that's pre-sale, whether that's selling services at the beginning, your time at the start, whatever that looks like. That is the smartest way to fund business growth and business operations, is through sales. Now, if you can't fund it through sales, then we need to make sure that any other method that you fund it through is repayable, and what the time period is. And that involves building a profit plan so that you can work out when you get the money in, what that looks like, when you need to make repayments. Debt can be a way to do it. Investment can be a way to do it, but there are lots of other variables. There's not a straight answer on that. So, do you want investors in your business? Are you happy to give away parts of it or not? Debt comes with interest. Does that work for your calculations or not? So you need to look at these other pieces of the puzzle, layering it into your profit plan to understand if you can't fund business operations through sales, then having a look at other areas and what is going to work for you, taking into account the other aspects that are involved when you have debt or you have equity raised in a business. Let's have a look. When will you know if it's a perfect time to diversify your investment? Okay, so investment activity, I cannot give advice on at all. Investment activity is the realm of an independent financial advisor. So you need to speak to an independent financial advisor to get investment advice. Chartered accountants are not legally allowed to give investment advice to you, specific investment advice. So you need to speak to an independent financial advisor to get investment advice. If you want to be connected with some, send us a DM, send me or the team a DM, and we can do that. But we can't give you specific investment advice. That is out with our scope and out with our realm. So you would need to speak to them about your entire portfolio, what that looks like, and when is the best time to diversify with that as well. Papa on YouTube has got a great question. If I had to sneak a parrot through airport security, how would I do it? I wouldn't try and sneak a parrot through airport security. I am somebody who likes order and rules, and therefore trying to sneak a parrot through airport security is not something that I would attempt to do. But interesting question, nonetheless. What makes Profit First methodology different from other methodologies? Well, Profit First is a method of cash management. And in all honesty, there aren't really many other methods of cash management. The great thing about Profit First is it actually switches your mindset. It switches your mindset from one where you live off the financial scraps, the leftovers of your business, to where you are the most important person, where you are taking your profit first. You are taking the money due to you and you are running the business off the remainder. And that is the most, the thing that we see with clients, that actually when they switch this mindset, that is when everything changes in their business. That is when their business's finances take off, and that is when their business gets into a great place financially. So that's the main thing with Profit First, is this mindset shift, as well as of course the practicalities of how you actually perform it, but the mindset switch is the biggie. Thank you everyone for your questions. This is, we're getting some great questions coming in here, which I really do very much appreciate, although we are nearly on time. So I am gonna have to conclude the question asking, but any other questions that you have, do save them up for next week's strategic chats, and we can cover them off then as well. Thank you for joining me. Thank you for tuning in. I am live wherever you are watching again tomorrow at 7:30 a.m. So do make sure you join me for that session tomorrow. I can't wait to see you there. If you have enjoyed this session, if you've got some value, give me give me some reactions, give me some thumbs up or some hearts, whatever that is, whichever platform you are on. I would massively appreciate that. I'd love to see some of those reactions, is the word, coming through. So I would very much appreciate if you want to give me some of those. That would be awesome. Thank you for tuning in, though. As always, I do appreciate your time. I know it's incredibly precious. So thank you for spending some of it with me today for the Business Wealth Show. Like I said, we'll be back again tomorrow, 7:30 a.m. So do make sure you mark it in your diaries, 7:30 a.m. weekdays. Currently, I'm saying currently because as and when our schools go back, etc., it will be subject to change. But currently, 7:30 a.m. weekdays is where you can find me, wherever you are watching just now. I am also going to be live later on Clubhouse at midday. My Clubhouse handle is Annette Fergs, ANNETTEFERGS. So do make sure you tune in for that as well. I'd love to see you over there. Come give me a follow, hit the bell so that you know when I am live, and you can come and join the room there for our open discussions. Thank you everyone for tuning in. I will see you soon. Take care.